Hey guys, this is Financial Fitness, and I've got Nate. He's a certified tax specialist with the Independence Money Show. And I've been getting these awesome questions about LLCs. And as you know, I'm a welder. She's a real estate agent. And now we've got the man. He's super smart. Tell us about yourself, Nate.
Well, sure. I mean, from the perspective of this conversation, I'm a real estate investor myself. Started in 2007 and 8 when, there was obviously a little bit of a market meltdown. So you got some good prices there. And for me, I just kind of felt like, in 2006, the stock market, it looked a little sketchy. And so I kind of wanted to diversify out of that. But all of my investments were in a Roth IRA. And a lot of listeners don't understand that you don't have to, if you have an IRA or Roth IRA, you don't have to stick with just stocks, bonds, and mutual funds. There's some steps you have to take, some rules you have to follow, and there's people we can send you to guide you through that. But in my particular situation, I chose real estate, and so I structured it in such a way to buy rental property in my Roth IRA, and I pay zero taxes on that, 000, which I love.
Oh wow! Okay.
That's an upside.
Yes, I would love. So until you mentioned this today, and Chris came and told me about it, I had never heard about this concept. So I would love to hear about it.
Well, at the Independence Money Show on YouTube, I mean, we open our show with the same tagline, we protect assets and income from the theft of taxation. So let's dive in.
Man, let's go. I want to hear the downside too.
Well, the downside is it's not going to give you any deductions. I watched your previous show on LLCs, great content. Didn't find anything I would want to add or subtract to there. But one of the things you mentioned is with LLCs, you can have deductions on your tax return. And obviously, if it's owned by a Roth, you're not going to have those deductions, but you're also not going to need those deductions because the income itself is not taxable. The other downside, if you want to call it that, is you can't stay the night there. So like you mentioned on the show, you're not buying, a property you want to sleep in anyway. You're not buying a condo on a ski resort. You can, but if you did, it would be a violation of the rules if you stayed a night.
Oh, okay. So you cannot stay, if it's in a Roth IRA, you cannot stay there a night. So you cannot do, for example, we just had someone ask us a question that if they bought a vacation home, how would they do an LLC in another state? So you cannot stay one night there at all.
Inside of a Roth, if you bought it in a traditional LLC, you could do whatever you want to.
That's very,
that's so what is that about it on the downside? I mean, is it hard to get out of?
Well, the other downside would be the Roth has a 59.5 age restriction. If you take any of your investment gains prior to that, it's a 10% penalty tax. However, your original contribution can be returned to you after 5 years without a tax. So let's say you originally started with 100 grand, that you maybe converted from your other IRA, and in 5 years, maybe that accounts for 200 grand. If you take the first 100 grand out, there's no tax. If you take the second 100 grand out, there's a 10% tax. To me, that's not a downside, Chris and Stacy, because you would have paid probably more than a 10% tax on it if it wasn't in a Roth every single year. So to me, that's not a downside.
No, I agree with you. That's not a downside.
It sounds pretty good. I always like to look at the downside first.
Oh, that agreed. Great place.
Yeah. Sometimes you can eliminate things right off the bat. So according to the upside, no taxes. I'm in on that. You just can't touch it till 59, or there's some penalties. And 10% is not really that bad. What else? Fill me in.
Well, how would you, so if I purchased a rental property today, how would I go about putting it into a Roth IRA?
Yeah, I think we're back still on downside side. So a lot of times I have questions like, hey, I already have a rental property. Can I transfer it to Roth? No. The only way to put money into the Roth is to convert existing IRAs to Roth or to do a cash contribution. You have to buy the real estate as a clean transaction from the cash in the account. It's called self-dealing. and it follows the bloodline. So if my mom, myself, or my kids previously owned a house, I can't sell it to my IRA. But I guess technically speaking, if I had money, cash in my Roth, I could go buy a house that my uncle was selling.
Okay.
So that's self-dealing. If you violate those rules, it's the same rules that say you can't spend the night there.
Okay.
And you can't commingle funds. So on a $200,000 house, you can't buy 100 of it in your Roth and 100 of it in after tax. But that's about the long short of self-dealing. But what's really super cool, guys, is the leverage Roth. So you can actually put down 40%. So say, just to keep round numbers, I know there's not $100,000 houses. Well, there are. Let's just say you had a $100,000 house and you had 40 grand in your Roth. You could buy that down payment in your Roth money and then get a loan for the other 60. Use the tenant to pay off the loan, and then you rinse and repeat. There is some rules on that. There is a very sliver of a tax when you use leverage, very, very minuscule, and can be mitigated. Obviously, I'm a certified tax specialist, so I teach people how to play by the rules. But definitely, if you're going to do any of these things, don't take this as investment advice. Seek appropriate counsel on people that know how to do this. But it's a very powerful technique.
So would you need to set up an LLC different from what we've already got set up and then start going to your Roth IRA through that? So it would be separate from what we have now, correct?
Yeah, you got that a little bit inverted. So you set up the Roth. The Roth then funds its own LLC. We call that in jargon self-directed LLC. It's owned by the Roth, and it has its own tax ID number, and you don't commingle that with any other LLC.
Okay. Well, that's cool. I'm not, it sounds like a great way to save for retirement.
Well, and people out there that have Roth IRAs, this is a really great way to get into the real estate business. If you don't have maybe just a lot of funds on hand, this is an excellent idea. I'd never heard of this before today. So
Well, there's a lot of people that are going to be in trouble when these pensions go under. You know, they just got bailed out with $86 billion because they're reaching insolvency. So,
Yeah, the self-directed definitely gives you a lot more control. Now, there is some legislation that some people claim or that they're kind of potentially attacking the self-directed, but I always quote John Grisham's book, The Firm, that the IRS writes the rules and we get paid to teach people how to play. So Congress always leaves back doors and side doors for themselves. And so I'm not terribly worried about this. There may be some changes, but I'm definitely still an advocate of being able to set up a self-directed LLC that's owned by your Roth. And you can own real estate, but you can also buy precious metals, and you can also buy cryptocurrency inside of that self-directed, which is a very powerful technique if you're wanting to diversify from the dollar.
yeah. Well, I think a lot of things are fixing to change on how they tax stuff. They're gonna move the goalposts and do everything possible. But that's why it's important to know you, man, because like you said, you teach people how to learn what the wealthy do, and the people that make the rules do. It's really cool. Do you have some time for some more LLC questions?
Sure.
Because I've got a few.
well, I guess, yeah, the biggest thing that we're having people ask us, and we kind of briefly hit on it from a layman's point of view in our video, but we're not tax experts like you guys. Why is it so beneficial to have an LLC?
It's in the title, limited liability corporation. It just encapsulates your risk. I'm a little bit of an extremist. Like, I just assume worst case scenarios. So I don't even own multiple properties in the same LLC. I will compartmentalize each property in its own LLC, so that if somebody was to sue me on the house called Main Street, the only thing they can do is go after that asset on Main Street. But if you have a loan on it, they're second in line anyway. And you should have property, you should have liability insurance. So, but the point is it doesn't bleed out into the rest of your personal financial lives, your personal bank accounts. And if you don't hold all your houses in one LLC, they can't cross the fence and jump into the next LLC that owns the other house.
That was another question I was going to ask you. How many companies then, because you might have just answered that, that would you recommend holding in one LLC? I mean, how many houses would you recommend holding in one LLC?
It depends how worried you are about things. I mean, my dad did up to 5. I
Okay.
did 1.
Wow. So you do one house per LLC.
Yep. And check with your state laws. I own a lot in Oklahoma, and in Oklahoma, they have what's called a series LLC. So it's one LLC by name, but then it'll say Series A, Series B, and that state laws gives you that the series LLC is as protected as having completely different named LLCs, but each state is different. But just work with a local attorney on that. Or you could jump on the Independence Money Show on Friday. I'm interviewing Adam, which is my tax attorney that I've used for decades, and he's going to have a lot more to weigh in on that too.
I saw that interview coming up and it's on my calendar to watch. Yes, I saw that. So you also said that. So we had someone else ask, so if you go out of state to purchase something, you get an LLC in the state you're in or the state that you're going to purchase the property in?
Again, without giving specific advice, what I do is I do the LLC based on the state that the property is in.
Okay. Why
I live
should
in
I have?
Colorado. I've got LLCs in Colorado. I've got LLCs in Wyoming, and I got LLCs in Oklahoma. It's really not that cumbersome.
Right. There's another question, and I've had this asked to me a couple times. Why should I have an S Corp versus an LLC? Why, or vice versa? Can you differentiate?
Sure. So Stacy, if you're self-employed and you're actively providing your trade, that would be an LLC as an S Corp. So an LLC is not even regarded by the IRS. They say, okay, you have an LLC, you need to elect your tax choice. Either it's a partnership, solo proprietor, or an S Corp. And so you have to kind of tell them how you want to be taxed. You want to do an S Corp if you're providing a trade or a service. So if you're a real estate agent or you're a property manager, even for your own properties, you could do an S Corp for, say, the property management side of your business. One of the huge advantages of doing that is because you're getting a W-2 wage from your own S Corp is now you can start a solo 401k and contribute up to some $50,000 a year into that and continue to buy more real estate. But if you're just running an investment portfolio, you do not want to do an S Corp because then you'd have to pay yourself a W-2 wage, which is taxed higher than real estate by itself. So you'd want to do a sole proprietor, which is the IRS calls that a disregarded entity, meaning it passes through the LLC onto the personal tax return, or a partnership, which then passes through to the personal tax return. So really on that situation, the limited liability corporation is the liability control, but the taxes flow through to the company.
I think that is the best explanation I've ever heard of the S Corp because I've struggled to understand where that comes into play regarding the LLC. That was excellent. I get it. Yeah, thank you.
Which one do you want to do?
I think that's it. That's pretty much all the questions
got a
that I
question.
had. So go ahead.
I've got a question. Have you ever seen an LLC be penetrated? Have you ever seen them be able to reach out of that and get into another cookie jar?
Yeah, they call that piercing the corporate veil. And Stacy, you hit upon that in your last video. If you're an LLC in name, but you're commingling your personal funds, it's paying for your vacation, it's paying for your little dog's vet bills, and somebody try to attack it, the court could say, you're not really treating that like its own company, and they could pierce the corporate veil. But, without giving legal advice, I would say if properly structured, no. I mean, the basis of our laws of our land are kind of designed for that reason.
And how do you get, so your properties are making this money in this LLC, how do you get it out to you? How am I able to get the money and spend it for myself legally?
You just write yourself a management check from your LLC to your personal tax return or personal account.
Okay.
That's just a distribution.
Okay.
And effectively, you're paying taxes on the income, whether you leave it in the LLC or not. So if you're paying taxes on the money and you leave it in there for operating or reasons or liability control, you're still paying taxes on it. So taking a distribution, profit distribution to your personal account and spending it isn't going to change the tax scenario, but that's different than spending it out of the LLC account on your pets and your vacation. You want to distribute it to your personal account and then spend that.
Okay. Yep. That makes
Very good.
perfect sense. Man, I would love to do more videos with you because we get people that ask questions all the time. And just so you guys know that are listening, this guy's doing an amazing service. He's sitting here for free, giving you guys advice that you literally have to go pay for most people. So this is amazing. This is stuff that we get asked all the time. And I wonder myself. So man, I really appreciate it. It's been awesome meeting you.
Oh, you guys are great people and your audience is great. I've read their comments. They got intelligent questions. You guys respond to them timely and efficiently. And, it's just, Amanda and I always say on the Independence Money Show, we're just trying to help one person at a time.
That's right. And we're one person at a time. We're going to end up with this awesome community.
Yeah, we are.
It's awesome. It's working. When we go to these meetups and you meet people like Nathan and Ninja and all these awesome people, you have friends for life. It's awesome, man. Thank you for coming on. Everybody go check out the Independence Money Show. I'll put it in the link below. Don't miss it. Hit the like button, subscribe, and share this video with somebody that needs to see it.
Thank you.
See you tomorrow. Thanks, Nathan.
See you next time. Thanks, guys.
Right.